All right, welcome to this next Fireside chat here at ABG Sandal Collier. My name is Simon Granat. I work here as an equity analyst here, in which I cover IT and technology companies. And one of the companies that I cover is Ework, which we have the pleasure of hosting here today with the CFO Johanna Eriksson. Initially, Johanna, thanks for coming here. Could you initially describe Ework just in brief for those of you, who do not know about the company and the position you have in the market?
Yes, I will do so. In short, you can say that Ework is a European leading talent provider within IT and engineering, and we are currently present in 6 countries in Europe. We are pleased that we are establishing ourselves in another country, so 7 in total. And we have a strong network of about 200,000 consultants. And you can say that we have had a very good development over the years. We are actually celebrating 25 years this year. So yeah, that's in short.
Yeah. Congratulations to that as well.
Thank you.
Indeed, you have had a strong track record historically, expanding gradually into new geographies as well, just recently into Belgium as well.
Yeah.
Can you talk a little bit about the geographical expansion, what you're seeing here? Does that entail higher cost? What is happening in practical terms when you expand into a new country?
Yeah, and what's really positive is that we expand with our current clients, and that is a luxury. I used to say that you already know that there will be requests when we enter into a new geography. So you can say historically we have had a success story with the Polish business, and in Q1 in 2024 we established ourselves in Slovakia, also driven by client request, and now we are establishing ourselves in Belgium, and we are also looking into, of course, the rest of Europe to see if we want to establish business in other geographies as well. Yeah.
And does this require men or women on the ground, or is this done mainly virtually? How does that work?
Yeah, it's a combination, I would say. Of course, we have a strong foothold in Poland, and we can do a lot from that business, of course, for instance, when we established ourselves in Slovakia. But of course, you need also foot on the ground. So I would say a combination is the answer to that one.
Very good. No, that's perfectly clear. And can you talk a little bit about the demand side? I think Ework has been always very good at talking about different demand trends. What are you seeing? You are one of the few companies that report on order intake, which I, as an analyst, appreciate a lot.
Yeah.
So I would like to hear what are you currently seeing on the demand side? The market has now been weak for some time. What are you seeing here?
Yeah, and what's interesting is that the market is so volatile. Of course, we are present in a lot of geographies, so we can see that, for instance, Sweden is a bit weaker right now, but our Polish business is flourishing. Yeah. So, I mean, it depends on what geography you are in, and also very much in what industry you're in. Because during this recession, so to say, then banking and finance, for instance, has remained strong, whilst other industries like telecom industry has been a bit weaker. So it's very, very volatile, and yeah, I have not experienced that before. So it's hard to say how the market will develop, actually. So, yeah.
No, it's very, very fair. Perhaps I can try to zoom in a little bit on one of the most important sectors, and that is the public sector.
Yeah.
Historically, that sector has been very resilient throughout different economic recessions or whatever you want to call it.
Yeah.
But that market has been relatively weak in 2024.
Yeah, and that's really interesting, as you say, because it's not the normal. But we can see that the public sector is actually weaker than the private right now. So we are happy that we have a good mix of both public and private customers or clients, and that has helped us a lot during this weaker market, of course.
Are you seeing any signs of any improvement into the public sector, perhaps in terms of procurements, budget proposals, or is it relatively weak and expected to stay there in the near term?
Yeah, we're not seeing very much movement in that sector at this point, but who knows what will happen in the future. That's hard to say, but not at this point, no.
That's very fair. And one driver to the overall industry in recent years have been price hikes. We have seen prices come up for IT consultants or consultants in general terms, while the development in 2024, perhaps as a reflection of the recession, has been at least more muted. What do you see on prices into 2025 and beyond, given that you are operating in a little bit different sector of the market?
Yeah, and that's interesting because I know the price pressure has been high in the IT sector during this period. But we see that in our new deals or new contracts, we are actually increasing many of our hourly rates, and that's kind of against the trend that has been. Of course, when you have a market where you have a lot of available consultants and clients with a cost reduction focus, that tends to put pressure on the prices. But we are actually seeing a positive development in this area, so that's really good.
Yeah, and it sticks out in the market, I must say, when I speak to other consultants as well.
I think it depends also on the mix, of course, and we have a lot of senior consultants.
Now, that's interesting that you mentioned senior consultants, because I believe that sort of plays into your strategy of improving the gross margin as well. How do you see the gross margin developing going forward? What actions are you taking to strengthen that?
Yeah, and this is a focus area for us. We have communicated before that we are actually leaving or phasing out some of our client contracts that are not profitable. So this is, of course, a main focus during this year, and we are working on two ends, so to say. We are working on creating more value for our clients and, of course, increasing our contract margins. That's one activity. But on top of that, we are working on our so-called total talent solutions and our add-on services to increase our gross profit and our margins. So you could say it's like two things that are in focus in trying to increase our margins. But the trend is very positive right now.
Interesting. And you've also done some, as you mentioned, the portfolio rebalancing of some unprofitable contracts. Is that work mainly done now, or could there be more potential for similar actions going forward, or perhaps that's hard to say?
No, I think that we have done our homework, so to say. We have communicated these two contracts that we are phasing out, and that will also impact 2025, the first half of 2025, when we look at the figures and compare. But at this point, we do not see that we will phase out more client contracts. But as you said, you never know, but right now we're kind of happy.
No, it's a good point. And as you mentioned, it will hurt H1 figures for 2025, but at the same time, you are doing it at the benefit of improving margins.
Exactly.
Very good. And then I'd like to continue on general network effects, what you are seeing in your portfolio currently, because historically Ework has sometimes been in an investment period, given that you have a platform. Sometimes you have been a little bit lower on R&D in general terms. What has happened in recent perhaps in recent quarters, and what do you see on the R&D agenda going forward?
Ework has done a lot of work on the internal digital platforms and of course invested in that, and that is also something that should give a positive effect going forward in terms of efficiency. So half of that job is done and more is to come, and we are actually going live with our new digital platform now in Q1, so that's really positive. And that was a big investment, and we do not see that we need to do that kind of bigger investments in the future. So a lot of that work has been done, and now we hope to see the positive effects of that.
Perfect. And on general costs, you did a cost-saving program throughout 2024, but that is now behind us.
Yeah.
Could we see similar effects going forward, or are you relatively poised now for when the market improves and then you can capitalize on that?
Yeah, right now we feel that we're on a good platform, so to say. The cost base is kind of normalized or right-sized, and now we aim to grow with this platform. So it should be a more scalable business going forward. But of course, the market, you don't know where it will end up in 2025. And if we see still a challenging market, we might need to reduce our cost or be cost mindful like any other company in this setting. Yeah.
Flexibility is key.
Exactly.
Yeah. Another question that comes to mind is regarding Norway, which has been weak over the past 2 years, I believe it's now, close to 2 years at least. What do you see into 2025 on the Norwegian market?
Yeah, it's a challenging story. It has to do with the Rental Act, of course, and how you have interpreted that in Norway. And it's been really fierce. And of course, that has hit a lot of similar companies like Ework as well. We are happy that we have a new head of sales in Norway that started in Q4, and his work has just started to kind of transform the business to adapt to these new settings and bend the trend, so to say. But of course, it will take time to adapt to these new settings in the market. Yeah.
I see. Ework has never, to my understanding, I'm relatively sure, has never done any M&A. Could that be something that you're looking into? You are well capitalized, you have a market leading position, you're expanding into new countries. Could M&A be something, or is this mainly about focusing on your own operations?
We're not closing any doors, of course. I mean, Ework has had a very successful story of growing organically, and that we will continue to do. But of course, we need to look into our strategy, and if we find some interesting M&A opportunities, then that is of course something we can look into. And as you say, we are well capitalized and low debt, so anything is possible.
Very good, very good. I think that summarizes this session well. If I were to give some reflections on our discussions here today, is that you've taken lots of cost savings actions. The market remains weak. We have not seen that many improvements. But still, when the market recovers, you are well positioned to reap that trends in terms of profit growth.
Yes.
Anything to add on that? Or,
no, it was a good summary.
Thank you so much.
Thank you so much.
All right. With that said, we'll end this session, and thank you all for listening in.